Good morning, traders. Welcome to Wednesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, as always, we want to check the news, see what's going on, when it's going on, etc., so that we're not taken by surprise. Looking at the news announcements for today, we do have some OPEC meetings that have been going on and will be going on throughout the day, so crude oil, because of that's going to be a little bit wishy-washy. But we do have some larger news announcements as well, starting at 8:15 with the ADP non-farm employment change for February. Forecast is 177,000. Previous was 174. If we continue down a little bit further at 9:45, we've got some medium news announcements with the market composite PMI and services PMI. 10 o'clock is the next batch of news, and that's the next large news announcement as well. 10 o'clock has the large news annouements, the ISM non-manufacturing PMI for February. Forecast is 58.7. There's a bunch of other smaller announcements around that as well. At 10:30, it's Wednesday. Crude oil inventories forecast negative 0.928 million. We'll take a look at API in a second here. That'll give us an idea as to what to expect. And then as we go into the afternoon session, we don't really have a whole lot else. There's a few speakers at noon with FOMC member Bostic. We've got Chicago Fed President Evans speaking at 1. At 2 o'clock, we've got the Beige Book. And then later this evening at 6:05, we've got FOMC member Kaplan speaking. Not a whole lot going on after that. So the big news is for today, which is going to be the ADP non-farm at 8:15. We also have 10 o'clock news. And then for inventories on crude, that's all at 10:30. Now, as far as crude oil goes for the inventories, today's forecasted at a negative 0.928 million. If we look at yesterday, we also have the API report, which comes out on Tuesday afternoon, which is right there. So the API weekly crude oil stock came out at a positive 7.3 million. Wow. Forecast is negative 1.8. So obviously there was a lot more than it was expected. So if we're going into today and we're looking at the inventories are anticipating seeing a negative 0.9. Realistically, that doesn't make a whole lot of sense. We're probably going to see this thing coming out at like a 5 or 6, maybe even further up million. So it's going to likely be pretty bearish as far as the crude oil numbers go. But aside from that, everything else is pretty straightforward. So now we can jump into some charts for today. Today being 3/3 of 2021. First up, taking a look at the NASDAQ with the overall ascending wedge, kind of, sort of. The big thing that stands out here is that it still hasn't broken a new high. The new high is really what we need in order to see the trend shift, right? We need an uptrend by having higher highs, higher lows. That's how it works. So because we haven't broken a new high yet, well, realistically, we don't have that trend shift in the bigger picture. So they're still fighting off of these highs, and at the moment we've got the first lower high, then the next lower high, and now maybe the following lower high. When you see them falling off like that, that becomes a very large sign of bearishness. That's not a good sign for bulls. So buyers are definitely trying to hold the market up, and we've got maybe a little bit of a wedge that the base is skipping off of. But realistically, it would be a lot more interesting, I think, for buyers in terms of trying to buy on the cheap, since we haven't broken above the highs, to get another quick breakdown underneath the bottom of the wedge, fill that weekend gap, that month gap down at 12,905.75, and get a nice deep L4 all back at that previous area of structure. That makes a lot more sense for buyers to try to push back down there rather than way up here. Next up is going to be the S&P, and the overall movement is predominantly sideways, but there's a few things before this overall wedge that's going on right now that are going to kind of give us clues in terms of what they're going to want to do next. First off, the market was rallying very aggressively to the upside, and realistically, it's very much expected that buyers will be looking for a continuation off that. Why wouldn't they be, right? It would make sense. We've got a nice, big, strong reversal off of the lows. They did break one of those previous major swings, actually quite a few of them. So that confirms a trend reversal. Buyers will be buying in the pullback. But they got absolutely obliterated. And when they got obliterated, the average was around 39.22. It's a very high weighted average, but that makes sense at the time because, well, they're buying on the pullback, expecting this thing to keep going on up. And it didn't. So a lot of that movement to the downside will have stopped those buyers out on a couple of these flushes. But along with that, a lot of buyers will also be trapped, and they'll be stuck with an average at around 39.22. So realistically, what will they be looking to do? They'll be looking to build in heavy down at the next logical area of interest so they can bounce it back out, and that will allow them points of interest to get out at break even. A lot of traders will still hold on to that ultimate objective, in this case being the overall entry point of the original earlier move before the drop. That would be at 39.22. So as far as a zone of resistance, that's what the market's gunning for right now, is to complete that move all the way back up to 39.22, because that's where it all kind of started. That's where the trap took place. That's where everything reversed. From there, then we've got a chance to start going the opposite direction, because we can see this move down will have taken bulls by surprise. But if bears were expecting another strong leg to the downside, well, they obviously didn't get it. And now we've got the same thing in the other direction. Starting to get a little bullish, I think. Then over on gold, we've got a nice descending wedge continuing its way down. And more importantly, we're also seeing gold continuing to skip off of these levels of resistance on the way lower. Initially, we weren't so sure, is this actually one? I mean, we're drawing it off of some really crazy looking swings. Does it actually fit? Well, sure enough, it did actually fit. Well, the next thing that we need to see, just like we need to see with every trend, is lower lows, lower highs. They finally started seeing at least shallow lower lows, lower highs. So the market's attempting to get a reversal to the downside. It's in the very short term. But we're coming off of a nice level of resistance, and it kind of makes sense. The one caveat that we've got going on here is that there's no divergences on the downside, and actually there's divergences against the shorts. This is possibly suggesting that, the underlying, the overall move to the downside is getting a bit weak. So sellers trying to drive down might not necessarily be expecting a move all the way down to the bottom of the wedge. Instead, more likely kind of the inside swing that will give them a front run target to make sure that they're out before getting stuck down here holding a bag that never actually ends up happening. Then we've got crude oil, which is going into, a bit of a fist fight here. There's a lot of back and forth going on here with crude. We've got the heavy bull L5, which is also at the base of this major wedge. That's also at the previous zone of massive accumulation. Kind of looks like the S&P. The market is responding pretty aggressively, fairly obvious. Along with that, there was divergence off the lows. Buyers are attempting to kick this back higher. The only thing that we're really missing is a higher high. We've got the last attempt to try to get a higher high completely failed. Now they've got to try to do it again. So if the bulls are going to take it, they've got to get above the high here, back above 61.30-ish, which means that they've got to make it through a lot of stuff. We've got falling resistance. We've got the bears L2, which is currently being tested at the moment, which is right on top of previous structure. There's a lot of resistance here at around the $61 mark. So in order for the bulls to take it, which is definitely still a possibility, they're going to have to muscle up through a lot of this stuff in the way. Now, a few things that definitely help that. There's a possibility that the L1 that was attempting to get going to the downside, that's right here. The shorts tried getting in. They just got dumpstered. So those sellers who are looking at getting short over here and getting annihilated now, they're going to be looking to get out if it dips back. And what better place than right back to the $60 mark, right to the bottom of L1. It's a broken L1, looking for continuation back to the upside. There's a lot of things setting up down here. With inventories today on top of everything else, it could get a little messy. Then switching gears over to the euro with I don't even know what to call this thing anymore. This thing's like a roller coaster. It's jumping all over the place. The massive wedge all the way down towards the 1.2 bounce worked out phenomenally well. I mean, you can see the divergence at the bottom. It's like they're skidding the brakes all the way there until they finally hit the wall. And I guess in this case they just kind of bounced. And just barely missed it. There wasn't a wreck. There wasn't a totaling out. So with that reversal off of the 1.2 and such an incredible amount of strength coming back up, we're now all the way back up to 1.21, and almost as if the last few days didn't happen, we're right back up to where we were before. So buyers are attempting to get this reversal higher, and obviously there's a lot of consolidation going on because there hasn't really been any pullback. This is forcing a lot of traders to position themselves very high into this more recent move, which is never comfortable feeling. So realistically, if buyers are going to stay in this, they're going to want to see it keep going faster than pulling back. It seems like a lot of stops have been taken out, lots of trapping going on. So realistically, it makes a lot of sense to see it keep going up. Everything is pointing higher. It's just buyers are being forced to buy really far up, which always makes it a little nervous. Then switching gears over to the cryptocurrency side of things, with Bitcoin rallying higher. Very aggressively rallying higher as well. I mean, that's no joke movement to the upside. This thing just sparked the match from 47,000 basically all the way up to 51 where it is now. Big jump to the upside, but the big thing that we really need to see is a break of the previous swing. Remember, we need that structural break. We've got the previous smaller one down here, right? That did break. We've got continuation from that point. Now we need to see the big ones, right? So if we can start really breaking through the big ones, then we've got a confirmed trend reversal. We have a confirmed trend reversal in the short term. Now they just have to finish off the job in the big one. Realistically, this amount of strength to the upside, any pullback is likely going to get bought up for another leg anyway. So it's very likely that we're going to see a break above the 52,000 and attempt to break through towards the top of the channel. And that would be the major objective. But with Bitcoin, you know how it goes. Sometimes it overshoots, and when it overshoots, we might see this thing back at all-time highs, depending on how crazy it wants to go. And then finally over on Ethereum with an ascending wedge here as well. And we're seeing more continuation to the upside, breaking back above the 15s, now the 1600s. And still also, I mean, just like Bitcoin, demonstrating a really strong rally higher. The big thing that we've got going on here is that even in the shorter term, we're just recently breaking above some of these larger swings. So as far as a trend reversal standpoint is concerned, it's still kind of early on. We've got a lot more work to do breaking through some of these larger swings above into the 1700s. If it can make it up to the 1750s, then we've got a good shot at a full-blown continuation back to the upside, and then 2000 plus, you know, maybe all the way up to however far Ethereum wants to go. But for right now, we've got a lot of work to do, and buyers will be looking to buy still on the cheap because they know that there's a lot of work to do. So instead of buying way up here, a lot of buyers are going to be looking for a pullback to the base of the wedge or something that's just a little bit cheaper. So as far as continuation goes, it looks really, really strong. It looks great for continuation. I just think the buyers are going to have a hard time, aside from FOMO chasing at the top, way up here. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. I hope you have a fantastic trading day today, and we'll see you all in the next. Thanks.